Hey, welcome back to YT Finance, and today we are talking about Workhorse stock news, specifically Cathie Wood's Ark Investing buying more WKHS stock, how Workhorse Group is bouncing back already, why Wall Street analysts are very bullish on Workhorse stock lately. We will also compare Workhorse to Ford for the USPS contract, and lastly, what two stocks could be great buys in December. Remember to like this video right now for more electric vehicle stock updates. Subscribe if you are new to these videos, comment down below your thoughts on Workhorse stock, and let's make you some free money with Webull. Webull is a brokerage where you can buy and sell stocks, options, and cryptocurrencies easily. Right now, if you make an account with Webull, they will give you 2 free stocks, each worth anywhere from $2 to $250. And if you invest $100 or more on your first deposit, you will get 2 more free stocks, each valued from $8 to $1,600. You are basically guaranteed to make $20 or more if you cash out immediately, or you could luck out and receive up to $3,200. Not to mention that you also have a 1 in 100 chance of getting stocks like Facebook, Starbucks, or Snapchat, and you have a 1 in 50 chance of getting stocks like Google, Procter & Gamble, or Heinz. To get this offer, just tap on the link in my description box down below, and do it quickly because this offer ends on December 14th. Now with that out of the way, let's talk about some Workhorse stock news. Currently, Workhorse stock is up over 10% today, but not before Cathie Woods bought WKHS stock through her Ark Invest ETFs, particularly her Ark Autonomous Technology and Robotics ETF. Right now, that ETF holds 1.36 million shares of Workhorse stock, which is the 18th largest position in it, and Cathie Wood bought 153,000 more WKHS stocks right after the USPS contract delay was announced. Some believe that the Workhorse sell-off was an overreaction, and I will tell you from experience, basically everything that happens in the market is an overreaction. But Ark Investing and Cathie Wood capitalized on this reaction and bought Workhorse stock at a discount, and right now their Ark ETF is up over 86% in 2020. Many speculate that Workhorse Group is a leader for the USPS contract, but after the delay, the stock plummeted, diving more than 19% down. So why did so many people lose hope in Workhorse stock after the delay? Well, mostly because people wanted to take profits, but this does not align with Wall Street, because not everyone on Wall Street is even concerned about the USPS contract delay for Workhorse. Even analysts from an investment bank supported Workhorse and said that they are majorly bullish, so they encouraged investors to buy the next dip. And that is exactly what the market gave us, and Ark Investing took advantage of this like a pro. But this is not the first time that analysts have been excited about Workhorse stock and then lost some steam, like with Roth Capital, who was extremely bullish on WKHS stock, but then later changed their minds slightly to be less bullish. Roth Capital has even warned that given more time, Oshkosh and Ford could upgrade their bid to be an electric vehicle or somewhat of a hybrid, thus rendering Workhorse's advantage null and void. This will just get worse if the USPS contract is further delayed in the first quarter of 2021. Workhorse shares have seen a major increase in activity lately, with the stock trading between the prices of $20.66 and $23.15, with a usual trading volume of around 17 million shares, compared to recently it was over 22.5 million shares being traded actively. So if we had to pick between Workhorse or Ford, which company would give us the greatest amount of return on our money? We have to remember that Workhorse is a technology company, not just an EV automaker. But the USPS contract could even this out for Ford, but currently Workhorse is in the pole position for the contract because it has the only fully electric vehicle, plus the stock has more than 20 times its original price. If we just take Workhorse's stock compared to Ford stock without any other outside information, Workhorse's stock blows Ford stock out of the water. Now, we are comparing more of a growth stock to a dividend stock, but nonetheless, Workhorse stock is still better comparatively. But Workhorse does have internal problems, and both Ford and Workhorse have debts. Sadly for Workhorse, Ford is invading the electric vehicle space, and with Ford's supply chain management and talent, this could get very interesting for Workhorse very quickly. Luckily, Ford has not entered their E-Transit electric van into the USPS contract bid, and they instead used a traditional combustion Ford Transit van with the joint venture with Oshkosh to clinch the USPS contract. But I doubt that the USPS will renegotiate bids because the prototypes have already been tested. I really just hope that nothing changes and renegotiations do not take place because of the plethora of delays that we have seen. Although Oshkosh does have relations with the government, Workhorse vehicles, in my opinion, are better quality. So Workhorse's biggest concern, which has not changed yet, is quantity. It's the amount that they can produce themselves. Now for the two stocks that are good in December, which are Surprise, Blink Charging, and Workhorse Group. Workhorse's technology is great, which is another reason why Cathie Woods and Ark Investing loves them. And because electric vehicles are the future, those cars will need charging stations, which Blink Charging can provide, or you can go with SBE or Plug Power. All of them are good choices in my book. It's similar to how when the combustion engine came out, the car dealerships had some good profits, but it was the gas companies that got all of the business in the end. Workhorse has been doing okay with $540 million from institutional investors, which will definitely help their production problems, so Workhorse should continue to go up with minor pullbacks over a long period of time. Workhorse's net sales increased over 130% year over year. Their earnings per share is set to jump by 50% next quarter, and for the quarter after that, they could jump by another 80%, along with their revenue growth year over year of being over 70,000% improvement. Now, these metrics could mean one of two things. Either one, they started from a very, very bad place, or two, they are going to have very good profits in the future and make people a lot of money which hold their stocks. I personally think it's a little bit of both, but we're going to have to see. Now, Blink Charging is doing very well with their cable innovations. They acquired another charging station company. They have a good amount of charging stations already in existence. Blink's revenue also has increased 18% year over year. They also had a 74% increase in sales and an 87% rise in their charging stations. Analysts anticipate Blink Charging to rise another 9% in the next quarter and close to 30% next year as more and more people start to buy electric vehicles. Blink is expected to make $2.5 million this quarter, which would be a 264% jump from last year. Blink has also grown its stock price 2,673.6%, and it might not even stop there. Remember to like this video, subscribe if you are new, comment down below your thoughts, and I will see you in the next YT video.